The first rule of futures trading is to never reach the liquidation level. The second rule is to never forget the first rule. Welcome to Coin Engineer, friends. As you know, we are preparing a tutorial video on the most up-to-date version of Binance's futures section, that is, the futures trading section. We are sharing the most up-to-date version with you in this series. What did we talk about in previous videos? We talked about how we can open and manage futures trades, and we delved into the details of long and short trades, friends. We discussed when to use long and when to use short. Today we will talk about liquidation, friends, or being liquidated. We see a lot of news on the internet, like someone fell into depression, went bankrupt, attempted to take their own life, and so on. The main cause of these is being liquidated, going bankrupt, friends. In this video, how can you protect yourself from being liquidated? I will actually talk entirely about this. I will also touch on the strategies I use myself. This video might be the most valuable one in our playlist. Therefore, I recommend you listen very carefully, and as a thank you, giving a like and leaving a nice comment would make me very happy. Your nice comments motivate us, friends. Let's mention that too. By the way, if you haven't registered on Binance yet, you can use the link in the description. When you register with that link, you benefit from a commission discount on your trades, friends. So make sure to take advantage of this. Now, I want to examine the chart with you a little bit. As you know, Bitcoin is a more stable cryptocurrency compared to altcoins because its market cap is higher. Even though its market cap is much larger compared to altcoins, as you know, Bitcoin is also quite volatile. But people trading in the cryptocurrency world can sometimes overlook these sudden movements of Bitcoin. As you know, our last peak was at the 72,000 levels. When it reached these points, no one thought it would drop below 60,000. It was anticipated that it would drop to these levels after reaching at least 90,000, 100,000, many. But today, at the point we are looking at, we see a Bitcoin chart that has dipped below 50,000, let alone 60,000. Currently, there is a daily chart, so each candle represents one day. To actually make you feel the volatility, let me show you how large the last big candle is. Almost 15%. So there was a 15% change that day, friends, in just 24 hours. So quickly. Similarly here, a 15% drop, a 6% drop, a 10% drop, a 7% rise. In short, we must never forget that Bitcoin is volatile, and other altcoins experience this volatility much more intensely. If Bitcoin drops by 10%, they drop by 18, they get 20. In fact, depending on the dominance level, there have been times when they drop by 40, 50%. For example, when we come to the market section, we can see all the cryptocurrencies here, and as you can see, these cryptocurrencies are listed according to market cap. The lower the market cap of an asset, the riskier it is, friends. Especially if you are in futures, let's say you are going to open a trade with $100 and, according to your own risk management, which we will discuss in more detail shortly, opening a 10 leverage Bitcoin trade seems reasonable to you. Understandable. If you have managed your risk well, we can open up to 10 leverage. This is not a problem. We set a maximum of 10 leverage, right? If we are using 10 leverage on Bitcoin, let's say, we go lower. For the coins here, that is coins with a lower market cap, we should use 4 or 5 leverage at most. We need to understand that the volatility or risk in cryptocurrencies with a low market cap is much higher. By the way, we also have a liquidation map on the Coin Engineer website. By looking here, you can easily see the parts where liquidation is intense. As you can see, everywhere is filled with liquidations. The market is constantly liquidating someone, friends. At some point, someone is opening a position or getting close to liquidation levels. We don't necessarily have to be going through a very volatile period. So if we look at the last week, there's a more stable market compared to before, right? Firstly, the first suggestion that comes to mind is actually using a stop loss. What was a stop loss, friends? It was a type of order method. Let's say we opened a long position from here, friends. Let our target be here. We have targeted the previous peak. We opened a long position from here. We also placed a sell order from here, so we aim to take our profit from here. But as you can see, it went down without reaching there, friends. Now, if we hadn't closed this position, we would have been part of a 20%, even 21% drop. And if our leverage ratio is high, if we opened a position with high leverage, we would likely have been liquidated. In such situations, it's actually much more sensible to set a stop, friends. Because let's say you opened a position worth $100 and set a stop order 10% below. So if your leverage is 5, let's say you set a stop 2% below the price you entered. In that case, our order would be executed. So what would happen? We would lose $10 from our $100, or if we opened a position worth $1,000, we would lose $100. But since we have money, friends, since we have cash and are stress-free, that's also very nice. Our mind is at ease. We got rid of that asset. Well, we could try a long position again from somewhere here, right? So don't be afraid of the stop. It's not a problem to stop and lose a little money. The problem is if you wipe out all your money. Just wait a bit for this decline to pass. Later, you can open a long position again with your money. You can actually get back into the game. It's necessary to make setting a stop a habit. We've been saying this for years anyway. Stop, stop, stop. But while trying not to lose $10 or $20, people can lose hundreds of dollars. They can even wipe out their entire wallet. That's why it's best to accept small losses when necessary. Our second point is the high margin strategy, friends. We have allocated $1,500 for futures. What was our rule? We should transfer at most 10%, 5% each of our entire cryptocurrency assets to futures. And let's assume we transferred $1,500. In that case, instead of using this money in a single transaction, open a transaction worth $100. Don't be greedy, friends. Opening a transaction worth $100 or $200 and adding the remaining money as margin will prevent your transaction from ever reaching the liquidation level. As you know, by adding margin, we actually move away from the liquidation level. That's why let's keep our transaction a bit low so that we can freely add and remove margin, friends. You might earn thousands of dollars in a few days, but if you liquidate them afterward, it becomes meaningless. Therefore, progressing slowly and steadily is much better. As you can see, I am in a long position for Hicoin here. My liquidation level is 4 cents, friends. As you can see, my entry level is $1.50. The liquidation level is 4 cents. For example, let's buy a little bit of Ripple. We don't need it anyway, we're in profit. Let me transfer some of this margin to my long position again. Follow my liquidation level, friends. As you can see, my liquidation level has disappeared, so it's impossible for me to be liquidated. What do? When my position recovers a bit more, I withdraw that money, friends. This is the nice thing about adding margin. But let's say I had opened this position. With $1,000, it should now be a $200 position. Or if I had opened a $200 position and used very high leverage, then I wouldn't be able to cover the margin, friends. So what do people do then? They start bringing what they hold in spot here, or if they have stocks, gold assets, they liquidate them and bring them here. Thus, things become very, very terrible. Therefore, open your positions at quite low amounts and be at a level where you can comfortably add margin. Our third point is the hedging method, friends. But I do this manually. You opened a long position on coin A. You think you entered at a good level. After a while, after the market has been pumped a bit, shorting an asset that you think will fall, one that is inclined to decrease, will prevent a potential crisis, friends. Let's calculate the probabilities. Let's say the market has been pumped. What happens to my Ripple position? Since I'm short, it might start to incur losses. But in such a market, I believe this coin will rise, friends, and quite significantly. So what can you do? You can close your profitable position and add to the other one. Or you can just take your profit and wait for the other position to come through. If you're not in a hurry and are far from the liquidation level, or let's say I urgently need money right now, I would cash out both of my positions as they are. What happens? I would make a profit of $4 or $5. Yes, it wouldn't be a profitable trade, but I wouldn't incur a loss either. Our last point is actually placing orders from extreme levels. Friends, what do I mean? Let me elaborate a bit. Let's say you are in a long position on any coin. For example, Bitcoin, friends. If the market goes up, there's no problem. You take your profit and exit. But what if it goes down? You can place orders at certain points that might protect this position. What does it mean for your long position to go against you? It means the market is falling, doesn't it? Let's say it started to fall from here. In that case, you can place orders at very extreme levels. What could be the sound ways to manage this position? For example, you can place a buy order at a very critical point if you have the budget. What happens? It doesn't reach the liquidation level. If there's a sudden spike, like here, you would have made a purchase from below as well. By taking advantage of the opportunity, you correct your average. Yes, folks, in this video, I talked about some strategies on Binance to prevent you from getting liquidated in futures trading. I personally apply these as well. We learned these the hard way, friends. Therefore, benefiting from these experiences will be to your advantage. If you are unfamiliar with terms like adding margin, setting stops, or liquidation level, you can watch our previous videos. I covered these in detail in the first video of our futures trading guide. I suggest you take another look at the playlist from the description section or the cards section. Thank you for watching up to this point. Take care of yourself.